if you look at sort of not just in Brussels, but in the Beltway, in terms of more and more regulatory scrutiny, the difference is it's a lack of consensus. And as long as there's a lack of consensus and you have 9 or 10 different plans toward antitrust, the street's going to take this as it's still a green light to own tech. There'll be fines, business model tweaks focused on M&A, but not necessarily business model breakups. The other thing I want to point out is that if you look what happened in China, that crackdown that's just been so fierce from a regulatory perspective, you've seen money move out of Chinese tech into U.S. tech. So that rotation is really creating almost a nirvana situation right now for U.S. tech stocks going into the next 6 to 9 months.
Really interesting what you have to say there about the China crackdown and how I guess, one of the beneficiaries of that will be some of those U.S. tech names, which are perceived to be safer from a regulatory perspective, relatively speaking. Another element that I just want to bring up as well, many CEOs, not just in the tech space, but practically every single industry out there have been warning about rising costs and supply bottlenecks. And obviously we did hear it from Apple CEO Tim Cook yesterday. But if you look at overall margins from the companies that reported yesterday, they are still extremely elevated, particularly in the software business. What does that tell you about tech companies' ability to maintain pricing power in this environment of rising costs?
Yeah, I mean, the pricing power, continues to just be massive. I mean, we see that on the consumer side with the Netflix, and then of course across hardware and across the whole ecosystem, because ultimately, these have really become consumer staples, internet staples, and many can't live without their iPhone or live without services, from the likes of Netflix and others. I think also it just shows the margin leverage in these models. You're also starting to see more software services, especially with the likes of Apple. Those are massively high gross margins. And that's why this is just even more and more of a leverage story going forward. These companies continue to pile up cash, but ultimately from an M&A perspective, they can't really acquire. So unless they look to just increase buybacks or decide to buy a country, that cash is going to continue to accumulate over $1 trillion when you put it all together.